Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, it's good to be with you.
The Toronto Stock Exchange had 10 straight up sessions. That's their longest rally since February 2014. Does it mean anything when a market has 10 days where it was going up?
Yeah, that's unusual. Oftentimes when you're watching one of these, whether it's New York or Toronto, 7-day run is good. Sometimes 8 days, but not very often 10 days. But a few years ago we looked at it, just on the 7 or 8 day run, and they're not necessarily associated with a major high. It's just that, hey, it's going and people are feeling compelled to buy, and I'm not taking anything big out of it at all, other than, hey, it's been a good market. Actually, since the highs, you had the blow-off high for the Bitcoin phenomenon, which, as we were talking about at the time, the price changes on some of those items was huge, but it's still crowd speculation, and the technicals got very extreme, and what you want to watch for then was a change, and we got that sequential sell on it was December 19th. And we noted that, and noted that action in Bitcoin hadn't generated one of those signals in 2 years, so it would be very important, in which it was. And then you've had the very hard hit and the rebound. So these big speculative moves, like whether it was both gold and silver heading up to that big peak in 2011, you also had the runaway move in crude oil to 147 in, that was June of 2008. And then going back, the runaway market in gold and silver that peaked out in January of 1980. So I was just talking to Ross about it this morning, and, these things, it doesn't matter what the name is. It's an example of very intense emotions in the marketplace. So what you had then was the broad indexes such as the S&P and the NYA. The NYA is the New York Stock Exchange Composite. Well, they made their highs in January, and it probably very important highs, particularly on the Bitcoin stuff, because when a bubble is over, it's over. And you can determine that because when you get the initial hit and the bounce back up, if the bounce doesn't make it to new highs, you can very well think that it's over. So anyways, the big stock market has been churning, with some big rapid swings in it, and of late it just came down to some support and a nice rally. And it's been helped. The stock market has been helped by what we figured going back to, February when the market had been hit, is that you got some seasonal moves for base metals out to around May or June, and then looked at the seasonal for lumber out to around June. You get also in the credit markets, which is very important for stock markets, even highly speculative stock markets. And the term we used, Jim, was that we're looking for sunshine in the credit markets in May or June, and we're getting that. So these things we have, and these have been supportive. And I've been thinking that the S&P or the Dow should be moving better than they are. In early April, on that low, which was against the 200 moving day average, we also got what we call a downside capitulation. So it was sort of like a springboard buy, and so there's a number of things suggesting that the market should be better than it is, and perhaps we might get a rally into June. Now, the importance of this, Jim, is that where the good stuff can happen into June, and I would think the most important would be the credit spreads, is that after then you can get a seasonal change to, let's call it, adversity in the credit markets. It's built in. It's been around for a long time. And if you have a good speculative move in the yield curve and credit spreads in the first part of the year, you'll have quite a setback in the last part of the year. Now, also it's worth mentioning that lumber is essentially going straight up. It's up to over $600, and we're getting excessive technical readings on this one, but it's one of these kind of things. It could go further for a few weeks more, but again, you watch for the break. But one of the things, other than the boom in the United States, that's really driving lumber prices is the silly business in British Columbia, where the expansion of pipelines has been held back. So what's happening there is, of course, oil is being shipped through tanker cars on the railroads, and then that leaves less train space for moving grain and also for moving lumber. Lumber is a very important product, so they're not getting it out. So there's a huge move in the price of lumber, and being now, let's call it hysterical. You're not certain how many more tens of dollars they can add on to it before it exhausts itself, but somewhere it will. So, Jim, I like watching these things, and then you compare them historically back to, for example, silver in 1980. So it's fascinating to watch.
We'll have more with Bob Hoye right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange, symbol PBX. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Bob Hoye. Bob, do you have any idea why there is such a disconnect between the price of gasoline and the price of crude? In the greater Vancouver area, paying $1.62 a liter in some places. Now, when oil was at $148 a barrel, we paid $1.58. So it's still just over $72 a barrel. It has lots of room yet. It can double in price and still be less than it was when we paid $1.58. Now, we can't blame taxes for all of that. Is this a case of like the EpiPen, they charge as much as they can because they can?
Yeah, somewhat of that, but your point is right. When crude was at $148, gasoline was much, much lower than now. So, but you have, again, the problem with the pipelines and the constraint of crude and gasoline being moved. You also have, perhaps in the Vancouver region, not enough refining capacity. And so, but I saw the headline a week ago that the highest gasoline prices in North America.
But across Canada, gasoline prices have gone up 14.2% in the last month. So it's not just Vancouver.
No, it's not just Vancouver, but Vancouver has started from higher and is higher, and so it's certain constraints here within the Vancouver market. All you had to do is drive up to and over into the Okanagan Valley, which we did last week, and prices were much lower there. But anyways, it's another market phenomenon. At some point, it gets too far, and moves are made to bring in more supply. So eventually, the markets can be competitive. Because actually, when you look at it, there used to be at times in various markets gasoline price wars, where gasoline itself has a certain shelf life, and if you got too much of it, you got to sell it. So. And like here, it's just that would be the opposite of what's going on now with gasoline prices, or for that matter, lumber. And the other thing is you got huge increases in land values in Vancouver, and service stations are selling out. So you have even less service stations within the city. So, but I'm not an expert on that, Jim. This is just some glancing views, and. But it is it's a hard fact that prices are very high, and of course in British Columbia you add on this carbon tax, and that's supposed to make everybody feel good. But the key thing about carbon is you spell it out as TAX. Tax is what it's all about, and it's just that the revenues, like when taxes were first put on gasoline, it was supposed to go to roads and bridges and maintenance. And of course it goes into general revenues and it's spent wherever it wants. So you then end up having money, automobile drivers are subsidizing other people that the government are looking after. So don't get me going on that one. But what we want to do, Jim, is look at the precious metals market, which has been dull and in the trading range, and it's fascinating to watch the gold and silver bugs on this one, because they just know that you've got a reckless central bank, and a reckless central bank, in particular the U.S., is going to drive the U.S. dollar down, which is the case. It declined into January, but then now it's recovering. But they seem to miss out that it's the public that chooses what will be speculated in when the central bank is reckless. And as far as I look at it, at the U.S. Federal Reserve System, it's been reckless since it opened its doors in 1914. But certainly, and this is where every gold and silver bug learned the message in the 1970s, that reckless central banking did result in soaring prices for tangible assets like commodities and wholesale prices, and even wages were bid up, so that you ended up with an inflation rate of 15%. And that blew out in 1980, 81, and you had a tremendous crash in commodities, and there was no change at the Federal Reserve. They give credit to Volcker, who was then chair, of ending inflation, but hey, it was just like 1920. In 1920, the change, the big boom in commodities was bigger than in 1980, and inflation got up to 22% in the U.S., whereas in 1980 it was 14%. I think that was the number. But anyways, the U.S. central bank really didn't change anything at all. The money supply kept growing, but then commodities got crashed, and out of that storm, suddenly the stock market and the bond market became the game. So it switched over to inflation in financial assets, and that game has been on more or less since, except you had, of course, good moves in base metals to 2011. You had the big move in crude oil to 8, but these things don't run forever. So what you're looking at now is inflation in financial assets. And as with 1929 or the big financial bubble before that, 1873, once the last financial bubble is blown out, then you get a long contraction. And at that point, no matter how hard the senior central bank tries to inflate things, it doesn't work. So this is why this big speculative bubble now is so important. The long treasuries and long government of Canada blew out in a speculative fashion in summer of 2016. So that bubble has been, let's call it contracting. Then you've had a really good game in junk bonds until early this year, and they are kind of rolling over. And then eventually the stock market will as well, and in which case then you've got a serious contraction going on, and it's quite likely that no matter how hard the Fed tries or the Bank of Canada tries, they won't be able to get the speculation going again. So our fate, Jim, is in the hands of the public, and they have been very speculative in the financial markets, and when it's over, it's over.
We'll have more with Bob Hoye right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, will this be a classic sell in May and go away year?
You know, that's a good phrase. It's a very good phrase, and I think it rides upon what we talked about a little while ago with the credit markets being favorable into around June and then losing, no longer favorable, and then in the fall getting ugly. So, and this is a case. Oftentimes in the fall, we might have low prices in the financial markets. And then you look at the seasonals for, 40 years on crude oil or grains or even more recently lumber, and you can get copper too. You can have important lows for those items sort of in November, December, January. So sell in May and go away is a very old one, and somebody's done some work on that and charted it using the Dow, I guess, since the early 1900s. And the way they work it is you're long from October until May, and you make a lot of money. And then if you are long year-round, you don't make as much. It sort of works that way. And so here we are. And you have the street, which tends to be bullish, and sure, everybody knows sell in May and go away, but it's very difficult to employ that discipline. And, so our view is things are good now. They were likely to be okay into about mid-year, and then after mid-year, it's likely to turn towards adversity, and it's best to have the big view and be patient about it.
Bob, are you going to be getting up early to toast Meghan and Harry's nuptials?
No, I don't think so. No, if one wants to look at it, one can view it on video afterwards. So, no, not for me. How about you?
Well, I don't see any slap shots or body checks taking place, so. We'll leave that to the in-laws who plan to celebrate with tea and bonnets and tiaras.
Well, actually, 7 or 8 years ago, through fluke, we were in England, and my friends were attending Windsor Castle, where that was when Prince William was invested as the Order of the Garter. So we were actually there, and they've got these townhouses just across the street from St. George Chapel, which is not a small chapel. It's a good-sized church. So we were there, and they had scaffolding set up, nice chairs out, a pleasant day, and pleasant stuff to drink. And so we watched the whole ceremony of the royal party coming down the hill into St. George's, and then, of course, ordinary people were not allowed during the Garter ceremony. And then everybody came out, and then on the street that we were in, it was just party time. It was a lot of fun. So, as I say, it was just sort of a fluke that we ended up there. And fortunately, I had my dark suit with me.
Well, it's only costing British taxpayers $58 million, so cheap at half the price, right?
That's right.
Bob,
when the Brits do pomp and ceremony, it is done well. They do it the best. Yep.
Well, so instead, I guess we'll all put on our bonnets for Victoria Day.
on what could be a rainy weekend. So, but we can commiserate, Jim, and raise glasses and drink stuff and stuff like that.
I don't have to be outside for that.
Yep.
Bob, thank you so much.
Okay, we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for Bob or any of our other guests, you can send them to info@howestreet.com. Check out our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. And I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.